What is up? Good morning, good afternoon, good evening, wherever you are at in the world. I'm going to talk about a few things here on the charts for about 10 minutes. I want to keep these videos short and sweet to the point so you can actually go ahead, not just watch the video once, but watch it 2, 3, 4, 5, 6 times to really master what we have going on these charts. And right here, right now, this is simple support and resistance on the chart, some EMAs, which are some moving averages on the charts as well. But that is really it. You know, you could do a lot of successful trading with a naked chart. So right here, I have just a few zones drawn out on the Australian dollar versus the US dollar. And really what I'm looking for is, what I saw was that this market started to create a point here that was bouncing and create the zone that was bouncing off of it. And now once it shot down here, it finally made a break and retested that same area just to shoot back up this way, right? And now it only shot up a little bit. However, you could have still caught, 15, 20 pips or so on that move. However, the reason why, and I showed you this on purpose, I don't necessarily look for this to come back off in the up direction in a bullish trend, because I am looking for a retest. So with these markets, guys, we want to make sure that we're entering in at the highest probability possible. And in order for us to do that, we need to find retest, and that way we can find the actual real move, which means we're going to be able to catch a lot more pips. So what I'm looking for here is simple. I'm looking for it to break this zone as it did and come back up to retest. So this was initially a ceiling, then it was a floor. Now I'm looking for it to create that ceiling again. Okay, so right now it actually did bounce off. We could have caught this sell. And you guys notice how all these circles are lining up, because this is the zone here. We could have caught this sell. However, we're late and it's Saturday right now. So we're going to wait till Monday, see what happens. But I want this market to simply come up here, test that area, close, have a candle that closes, and shoot down for our next zone to retest that area. It's that simple. This is simple support resistance, supply and demand, naked trading, guys. This is how it right here. So I'm looking for this sell, and what I want to talk about for the next 5 minutes is twin trading, and how twin trading can really help you start to maximize everything when it comes to your trading, being able to stay patient and being able to help you with greed, because the greed factor is a huge factor when it comes to these markets. There's so much money to be made in the markets, but it's about how patient we can be and how we can stop ourselves from being greedy at times, so we can slow down, be patient, and wait for the market to come to us. Okay, so right here, let's pull up a trade. So right here, say I want to go ahead and like I said, wait for this retest to sell at this area. I want to sell at this area. That's what I'm looking for right there. Now, what I want to do here is enter 2 different trades. And I made another video on my YouTube. If you have not seen it yet, it's called How to Profit Fast the Right Way. How to, it's actually called How to Utilize the Harmonic Scanner Using Proper Risk Management. So it's all about proper risk management with these markets. It's all about how you can manage your money, being able to have a risk-reward ratio at a minimum of 2 to 1, meaning that if I'm entering a trade, I want to be able to lose 10 in order to make 20 or more, at least a 2 to 1 ratio trade. So right here, what I would do is say, let me actually do this before I do anything. I'm going to move this down. I'm going to enter this trade once here. Let's do one. Let's do a green, the sell, right, and 2. So what I would do is I would enter this trade twice, right? I would enter this trade 2 times and say one here, one here. Around the zone twice, right? And what I would do is say that I was had a $1,000 account. I wanted to risk 10% of my $1,000 account. Okay, you have a $1,000 account. We want to risk a maximum of 10%, which is, we need to do 5%, say 5%, maximum of 5%, which is $50, okay? Now, that would mean if we have, now what I'll do first is show you a stop loss, guys. This is where you have to really know and be organized with your trade. I'm showing you a real trade here. We're gonna go ahead and do a 25 pip stop loss. So if we're at 72.60 and 72.50, so let's say we entered at 72.55. The stop loss would be 72.80, which is right here. 72.80, we're gonna make this red. That's a stop. Okay, this is the stop. Cut our losses. Okay, this is all gonna make sense. Cut our losses. If it doesn't make sense on the first time, that's all right, guys. When you watch something, read a book, watch a video, you become a new person. So that way, when you watch it again, you're gonna get totally new information that you didn't learn watching it the first time. Keep that in mind. Keep that in mind. That's huge when it comes to really anything in life. You have to realize that the more you learn, the more you realize, the more that you realize how much you don't actually even know. It's crazy to think about, but it's so true. So I'm going to make this less confusing. We're going to put both of these at 72.55, right? That's our entry. Our stop loss is 25 pips above, 25 pips above, and our take profit is going to be down here, right up, let's do like right above the zone. We'll do that blue for blue, take profit. So now what this is going to be is 7,200. That is 55 pips. That take profit is at 55 pips. Take profit. Take profit, 55 pips. And let me add this. Blue, let me do this. Stop loss of 25 pips. That's it. This is it, ladies and gentlemen. Okay, so that's what we're looking at. Let me move this over here. We all know this is the Australian dollar, guys. These are where our charts are here, Australian dollar with the hour chart. Every single candle here is an hour, all right? It is Saturday. The markets are closed, not moving, but the price is right here at 72.25. 72.25. I'm looking for the Australian dollar to become bullish up to this zone and then shoot down to the next zone here to start creating lower lows and creating a downtrend here, a bearish trend. Just so you guys can kind of see, you know, just really that bearish trend coming down here, making higher highs and lows in that area, guys. So keep that in mind. But here I want to show you real quick to end this off. $1,000, 55. 5% is 5% is $50 loss. Okay, so if we're only able to lose $5 and our stop loss is 25 pips, that simply means that if we had a 0.10 lot size, which is equal to $1 a pip, because you just moved the decimal space 1 decimal to the right, and that gives us $1. So if we lost the trade, 20 pip stop loss, we would have took a loss of $25. Now I'm allowed to lose 50 based on my account. So this is going to be based on your stop loss, two things, your stop loss and your account size. That is going to determine your lot size. Okay, then if that's the case, I know right away I can change this to double, which is a 0.2, which is $2 per pip. And if I took a 25 pip stop loss, I would be losing $50. And that would be my maximum loss. That's how I'm able to know before I go in, I want to lose 50 to make 100. And now let's see if this is the right trade to do with that, with that risk reward of 2-to-1. So right here you see $1,000 risk management, $1,000 account size, a risk maximum of 5%, which is $50. The lot size we saw was 20-cent lot, which is $2 a pip. That's going to get us loss of $50. Now we got to see if the take profit is correct in the right direction. So if we had a $1,000 account and I'm only able to lose $50, I know right away that my lot size cannot be more than $20 or 20 cents, guys. This is why the greed comes in. Being able to stay patient on your trades and use the proper risk management, because the money's always going to be there. Now, 20-cent lot size in the take profit is going to be 55 pips times 2 is over 100. 55 pips times 2 is 110. 110. So this is already over that 2-to-1 ratio trade. We'd be risking $50 to make $110. All right? That is the best way to trade right here. Now what I want to show you real quick to end this off is, I know I went a little bit over 10 minutes, but this is worth it. This is the power of twin trading. So twin trading, I would enter this trade, like I said, twice. That was for 10%. I'm sorry, that was for 5% of the $1,000 account, which is $50. So we know it's 0.20. But since we're entering twice, what do we have to do? We have to enter a 0.10 and a 0.10, which equals 20 when it's combined together. But we're going to enter them separately, put the stop loss in separately, put the take profit in separately. That way, what's going to happen here is when that, and I'm going to pull that back up in a second. When this market comes up here and we sell 2.10s, right here, 2.10s, when I'm going to actually put a take profit, what I'm going to do is I'm going to put 2 take profits. When you twin trade, you want to put 2 take profits. So even like this little zone here in this area, let me draw a zone instead. In this area right here, this little zone here, this could be my first take profit area. So what I mean by that is I would have a take profit here, pretty much where the price is at now, when it comes back down to it, and I would take one of my trades and take one of my trades out. That's at 72.25, 72.25. So if I did that 10 cent and it's at 25 pips, that's $1 a pip. So I just made $25. Now, here's the most important part. I just made 25. Now, what we're going to do here is once the market comes down and it goes your way, I'm going to literally, and it takes my take profit, I'm going to take my second entry stop loss. I still have one trade running. I already made money. Now I still have one trade running. I'm going to take this stop loss, take the price of it, and I'm going to move it in my MetaTrader. I'm going to move it all the way to below in front of your entry. Meaning, say the market decided to go crazy, it was some news on Forex Factory or whatever it may be, and it came back up in the other direction, you would get closed out already in profit or at break even. You wouldn't lose anything at all, and you already made $25 from your other trade. Twin trading is the way to go, I promise you guys. So now I'm already in profit. Now my stop loss is at break even or above, 2 pips in profit. That way I'm making money no matter what. And now say what happens. Say the market does come. It goes here. It plays around a little bit there. Starts playing around. And then what happens? The reason why we enter 2 trades is because it may make that next move down to our next take profit. Now we're making even more money on that trade. And here's the biggest part about twin trading. I can continue continue to do this? What if it came down to my take profit here, my second take profit of 55 pips? Now I already made 55 on this one. So I'm already up 55 and 25, right? So I'm already up 80. Now I can take my stop loss and move it even further down to the take profit 1. Now what happens is I do have $55 running. So if the market turns around and goes back up, it's still going to close me out with a profit of 25 back at this spot here. Guys, this is where organization, risk management comes into play. Being able to utilize your stop losses. The fact that even say the market wanted to make another move down, you're still in the trade. So if you moved your stop loss from all the way into profits, you can continue moving it down, 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 and capitalizing, literally capitalizing on this whole move. What if the market came all the way down to here? What if it came, you know how many pips that is? What if the market came all the way down to here? So what I mean by that is that's why we're entering 2 trades. The first one, you're going to take the profit because the market could just go back up. But the second one, you're going to move your stop loss and let it ride as far as possible. Think about if you caught this move. To end this off, I'm going to pull up this move. Think about if you caught this move, say from even here, from here to here, if we caught this move, this is literally crazy. This is crazy right now. If we caught this move, stop loss, 72, like right there. We caught this move literally, oh my goodness, 183 pips. That'd be insane. The ratio here is crazy. Almost 8.5 to 1. 8.25 to 1 ratio. Guys, that means you could lose, 8 times out of 10 and still make money. This is a psychological game. Trading is 10% skill, but when you really can get focused, be patient, not be greedy, put some nice music on like I have here in the back, and really lock in, dive into these charts. Reach out to us if you have any questions on twin trading, risk management, anything else. Of course, our whole academy with iMarkets Live is really going to get you to the next level. And then, of course, being able to get on with our traders, our live 6- and 7-figure traders. We have over 100 hours a week now of people getting on and teaching their strategies, because everybody has a different strategy, but it's just depending on, which way you want to go and what works best for you. So have a great rest of your day, your night, your evening, whatever it may be. I hope to see you soon. Reach out if you have any questions, and looking forward to getting to work on these charts, guys. It's right here in front of our face. It's just being able to take advantage of the technology that we have at stake here. So enjoy. We'll see you soon.